Good evening, everyone. So I finally got around to updating my Bitcoin and Ether charts, and well, in fact, all the crypto market charts, like all the totals, others, etc., for the annual levels. So finally, I can give an update on where I think the market's going, and I'm hoping the stream is okay. This is the first time, so I've set up multi-stream now, so I'm streaming to YouTube, horizontal and vertical, and onto Twitch as well, just to see how that works. I don't know if my bandwidth's up to it, so I guess we'll see. I have closed a lot of my chart windows, so hopefully we'll be okay on that. And yeah, let me know. So, Bitcoin. So hopefully the stream won't be too long, but not my usual 10 hours. But there are quite a few things to consider if we're looking at the macro. So, hold on, let me just go to my high time frame chart. So, this is the full chart with the parabola, and I've kind of grouped all my drawings and things, so it's still a bit hectic, but not quite as hectic as it can be. So looking at the rolling over of the parabola here, and the retracements from previous bull runs. My projection here was basically the log 161, because that's where we went to last time. So that was around 170k. But now we've currently hit the linear 161, so it's not surprising we're seeing some sort of a retracement here. And the text below is basically telling you of each move what type of fib retracement we've done. So I've used the trend fib and the retracement fibs. Both the first two bull runs went up to the 78% trend fib, and the 227 retracement fib from the previous move. And then the last bull run was slightly more conservative, and it only went to the 61% trend fib, and this 161 retracement fib. And then the current move is currently at the 61% trend fib and the 127 retracement fib. So it could stop here. Ideally, we'd want it going a little bit higher and closer to the parabola if it was going to follow previous patterns, which it doesn't have to. I think, we are in a very different market now. So it's hoping my YouTube's running. We're in a because I've got a spinning wheel to one side of me, which is making me slightly worried. But it does say excellent connection, which is unusual. So yeah, so we've got to the 161, so it's possible it ends here, but typically we would go a little bit higher than this, and January earlier in the year, and we've got some things going on in the traditional markets which are affecting it today. I don't really want to take today's local drop as a big deal, because if you look at it on this time frame, it's really not much in the grand scheme of things. However, we have just hit the bottom of my projection box, which was this most conservative 61% trend fib level. We did make annual demand on the plus side, so I'll just show that since I'm on this chart with less information on it. So annual demand being this last red candle, we've closed significantly above. So back down here at 46k, and obviously it can dip deeper inside that if it wants, but those would be solid levels to go long if price gets back down there. And then additionally, we've got a 3-month demand close to price, so I've got both of those drawn in on here, so you can see on the lower time frames. From the other thing, so I did cover some of this in my video last week, but it was the video that didn't work, so that didn't really help. Then on top of that, we've got let me just hide some of this. Okay, so if I take off the fib projections, the other projection I did as the price range was the date. Where is the date ranges? So I did have a look at the dates from previous bottoms to next tops. and it was slightly challenging from a wave perspective because we had two bottoms in 2015, two bottoms in 2018, but only one bottom in 2022. And then we had two tops in 2018 and 2021, but only one back here. But on what it has done is then given two options. So from a bottom to a top, we've got 1,000 days basically, or 850 days. And those aligned with March and October. I think this has shifted slightly, but basically around March and around October, in fact maybe February on this. Depends which time frame I look at this on, because obviously these are more vague projections. Actually this is coming up to mid-February 2025 or October for the final top, if we were to match previous waves, which obviously may or may not happen. It's just we do these projections just so we've got some vague idea of what we might be looking at. Then on top of that, I also did the fib timelines, and again used the bottom 2018 to either of the two tops. And interestingly, like, depends on those two options, both also came out as the same as the 850 days or the 1000 days. So March and October. So that was kind of interesting. So we're kind of looking at hopefully now not being the top. Is there anything else I want to show on here? I've got I had where the verticals where the halvings are. I had a whole bunch of analysis I did previously on fib timelines and things like that. I think that's about all that needs to be shown on this chart particularly. But as I said, so while we might have the top in now because we are at that linear 161 fib and the 61 retracement fib, we could potentially go higher to the log 161 fib if we had the same strength as we had on the previous wave, noting that the two before that were even greater, but the strength can be dying off. So it is possible this is the top from a projection perspective based on history, but we still need to see a bit more. But also, like I said, the structures are very, very different. We've got 3 month demand here, which we've never had before, but are the sort of things I like and don't like about the current structure, which I will get to. Okay, let's go back to the normal chart. My YouTube window is still spinning. And I didn't even start recording it, so that's not very helpful. I'll start recording it just in case. So back to my normal chart, which is full of information. So I've said before, we've got this sort of 3 month demand here. The thing I don't really like about this is I don't know if I've just seen enough charts now that I just wouldn't be confident. Despite the fact this is 3 month demand, I'm not overly confident we'll bounce here if we come back down there. I don't know why though, and I can't really see anything else on the chart. So I remember I used to scoff a bit at gut instinct when people used to talk about it. I'd be like, oh well, it should be data driven. But as I've got older, I've kind of realised that gut instinct has a big part to play, because gut instinct is your experience. So this, for example, looks quite similar to this, but then obviously we didn't make a higher high at that point. And also we haven't come back down to test this really. But I suppose noting we did go straight through that when we did come back down. So a consolidation here, and this actually reminds me quite a lot of ether. And again, I'll get to that because there's just things I really don't like about the ether chart. But then similarly, we had a bottom quite like that here, and we did go up from there. I suppose it's just if it comes back to test. And it's a different structure anyway. I mean, this didn't make a higher high here, so it's basically saying that that's weaker demand, but that's also why it reminds me of the ether chart. So similar here, it didn't make a higher high. We had a big consolidation in here, but it did garner a bounce when it got back there. But again, no higher high. It went lower and went back to deeper demand before the bigger up move. Bitcoin, however, obviously is bullish. It's broken out. Lower time frame. So what I'm looking for, higher time frame, in summary, is 46,000. Is or that area. I would have to fib it once I know exactly where the top is. The 61 I think is quite low in there at the moment, 32k. So 30k, there's a 3 month inside the annual demand would be a kind of key place to look. 46k would be a key place to look. if we get a retest down there, and then there's 3 month demand. So the 3 month being around 72k. But again, these zones you can dip deeper inside, and the chop makes it difficult. But I've spent, you know, in the past I've spent a lot of time kind of trying to figure out where we'd bounce if we come back down here, and we've ended up never coming back down. So I don't want to spend too much time doing that. But if we do revisit here, you know, we're looking at the 3 month zone as being 50 to 72k. And we're looking for a bounce somewhere in there. Ideally, you would fib the whole thing and find out where your 61 to 78 is, or 61-70 area, which tends to differ on the log and linear scales, and try and make some sort of judgment. The 61 is actually right on the top at the moment, which is really nice on the linear scale, and on the log scale it would be a bit deeper inside. So interesting levels to watch if we come back down there. Now in the short term, we had a 3 week demand that was made last week by a hair. So you can see this candle. I said we'd made it, but I said it was weak. We closed slightly above, and I said I didn't like it much, because I've seen them break down quite a lot. But again, I can't be bearish until we've seen a 3 week close under here, and we've still got 2 weeks for that to happen. 2 week and 1 week. So again, we managed to close above, so we didn't create a 1 week supply, although we already had a weekly consolidation in here, which has been rejected. So still this is a consolidation at this level, and what we have at the bottom here is this daily demand. So really what's bounding this entire consolidation is this daily demand here. So until this breaks down, I'm not bearish, and I've shown this pattern many times in the past, normally on a higher time frame, like not normally with the daily here, but I showed it back I think on the 3 week chart over here. So you can see the similarities on the lower time frame here. Here we had a 3 week demand, and while we were looking horrible here until we broke the 3 week demand, I wasn't bearish. And similarly, so we tried again, and then we tried again. It did come and bounce off this 3 week again here, but by that time it had made 3 week supply, and that's when we broke back through it. So there are similarities with that structure. And if you see now, so this up move is bounded by this daily demand at the bottom here, which we pop back into today. So we're looking now for this to kind of all, in the next couple of days, it can wick through here, but I wouldn't want to see a close below here. I would like to see a kind of bigger move off here. If we don't get that, and if we start to make higher time frame supply, which we're on the cusp of doing at the moment, then I'm going to be much more bearish overall. From a 5 day perspective, what happened last week is that we had this 5 day supply here. It was weak because it hadn't closed significantly below, and we took a big wick up inside it, but then that's what's rejected. So potentially, I think the CME chart is much cleaner on that, but we are seeing a lot of supply created above. What I was really hoping last night, and I can show the lower time frame chart, is that we get a wick up to that monthly level into this 4 hour here before the drop, but unfortunately we didn't quite get that high. Then on top of that, we have a 4 hour supply at the top of here, which hasn't been tested yet. And again, my gut instinct is saying I wouldn't want to short that if it comes back there. If it's a swing failure off the low, then there's a chances are it'll take out that high. But again, we'll cross that bridge when we come to it. But that's why at the moment my potential short entry is a little bit higher. And then I'd still look at the 4 hour there if we swing fail or take out these highs this week. So that's something to watch out for. Could also swing fail the 4 hour itself, so go a touch higher than this, but that would be kind of the area that I'm looking for the immediate rejection, or the possibility of immediate rejection. Then as of the lows today, so I was looking at not so much that low, but this low, which is a weekly low to get taken out, which was my first possible long entry, and then also potentially to take out this low, and then the next one, this low. I mean, there's a whole bunch through here for swing failures. We have taken out the first lot, but now we need to see this kind of get momentum and go back up and start to make low time frame demand, etc., before we want to have confirmed longs. And it's difficult now. I'm just going to move those over a bit. Probably shouldn't have done that anyway. It's difficult now because we are choppy through here. the supply is quite close. There's a 12-hour supply here, but as I said, because of those wicks left above there and the fact this is a Monday, I would expect that to get taken out. But you never know, we might get a rejection here. If we are to move lower than those, it just becomes difficult and it's knife catching. And I have found lots of arguments when I was looking earlier. I found lots of arguments for low time frame zones inside. So, you know, if we take out this zone, possibly we just bounce on the first zone, which is the 4 hour here, and it's the 61 fib, and it's the linear fib is a little bit higher. There's also a naked point of control there, so if I put those on, it was a weird notification, I don't normally hear that sound. And we just put the point of controls on so you can see. So I've got the session point of control, which is daily, and then I've also got a weekly and a monthly in there. So if I just hide everything else for a minute, the daily is the red ones, and the green I think is the monthly, and the blue is the weekly. And I haven't used the green and the blue that much, but I just kind of put them on there to observe. But so you can see that around this 4 hour zone, and there's another 4 hour zone below, there's two naked point of controls there, and then we've got the weekly naked point of control and the 12 hour just below, plus a CME gap, and that's the bigger CME gap, I believe. So there's kind of an argument for bouncing here, there's an argument for bouncing here. Then we've got the next significant zone is 4 hour demand, 4 day demand here, and that 3 month level, and then the various zones inside it. So again, it just becomes, like, for me anyway, maybe I'm just too over the top about it, but there are too many zones that I could see bounces on for various reasons, so we just need to kind of watch the zones as they hit. But this kind of just looks like I've marked every zone. The other thing that I've noticed in the past is when I do mark every zone, the top one, the first one, might get the bounce, but then if there are too many, it's not just me that doesn't know where to long, it's like nobody knows where to long because it's not clear, and therefore you can find it can just run through all the zones. So that's the risk. So I wouldn't suggest limit orders at any of these zones, but I think, you know, you can watch them, you can see if there are walls there, if the data supports longs, as and when they get hit. Do you see the bounce? Does the data support that? You know, if you're a high time frame trader, you could just put entries cost averaging on all the zones, and then whichever ones get hit. But if you're leverage trading, then I would just suggest waiting it out and seeing what gets tested. The only thing I haven't done on this actually is tally this. Normally what I try and do is tally this with the career chart and the CME chart. So I might do that a little bit later and just see, but yeah, so that's CME gap. There you can see the CME gap down to there, so that would be the 77k mark, and would be the lower of the two question marks, if that's to fill, and we've seen the ether gap fill today. And then I would also want to see the alignment with US dollar dominance, but again, this has that 4 hour equivalent to Bitcoin, but it's already hit it and it's hitting it again. Then it's got the 12 hour, and then it's got a 2 month supply, so that would kind of be the more significant, but I would like to see these things line up, and then I get more confident. The career chart is significantly more bullish. After this big drop we had on career, it then pushed, and we had in my previous video I was showing the career, the kimchi premium was significantly higher, and I've noted also that in the past, I'll show the chart in a minute, but I noticed also in the past that when the kimchi premium goes significantly higher, it's normally the end of the bull run, basically. So that's kind of not ideal, but it is a factor to be aware of, and one thing I said to be aware of when we were at the top here. But this is still looking quite a lot stronger. You know, the equivalent daily, or it's in this case 3 day zone, is down here, so still a significant drop that it could have there and still hold. And the structure is just overall a bit different. The annual level is significantly lower, and in fact was made last year and bounced, and that was what gave us the big bounce in January last year, or helped. But yeah, so Korea could still go quite a long way down in here, I think, and that's what I was trying to align earlier. I think there was a 10% drop or so from there to this 3 day here, and that would align with the US dollar pair getting to the 4 hour zone. Excuse me, drink a little bit of water. So yeah, Anyway, those are the key levels I'm looking at on Bitcoin. Quite a few of them, unfortunately. I don't like to give so many, but like I say, various reasons, and it becomes hard once if price does start to fall, then it can fall like a stone. And yeah, I would not suggest knife catching in that situation anyway. Having said that, obviously we have bounced now, so I'm not necessarily going even lower as of today. So we need to see a bit more of the week play out. So Monday, I was looking also at the last 2 Mondays. So Monday we can quite often have the trade where Monday makes a high or a low, and then Tuesday takes it out and then trends the other way. So we had that last weekend. We had Monday make a high, Tuesday Asia took out the high, and then we trended back all the way down. So, while we have that at the top, the previous 2 Mondays, we had the same Monday low, but the Tuesday didn't take it out. So we had the drop after the weekend. And this is Christmas, so maybe it was a little bit different, but 23rd of December and then 30th of December, and then Tuesday made a higher low before we went up from there. Excuse me. So yeah, so there's a possibility that this is the low already done, and that we're just going to run up from here now through Tuesday. And particularly we have PPI tomorrow and CPI on Wednesday, so both of those could have an effect and could send markets back in the other direction. We've had equities, S&P, Nasdaq, Dow have all fallen. US equities have all fallen quite a lot today. But they are all in major demand. So S&P was about to hit a monthly demand, although my alert hasn't gone yet, so I think it hasn't quite got there. Dow is already in it. Nasdaq does have further it could fall, but Nasdaq can be a bit of an outlier, and I think it's in a 2-week demand anyway. So yeah, not bearish until I see this demand broken that's holding up this whole consolidation. It's slightly concerning because it's a daily, and we've now got a long consolidation on top of it. It would be preferable if it was a weekly or something like that. Let me just check. Check my notifications. 1 second. Seems to be okay. I'm going to got someone testing testing my streams for me, so apparently they seem to be okay, so that's good, because they don't really look okay at my end, but that's fine, as long as they look okay for a viewer. Right, so yeah, so I think that's pretty much it on Bitcoin. I'm trying to think if there's anything else I wanted to say on that. The other sort of things are bits of data that I normally cover. So the ETF data, I've got a missing day on the 9th of January, and I don't think it was a public holiday, so I'm not sure if the data with Farside's gone a bit dodgy here. It's kind of back on the 10th, but we finally did have some selling off. So we had BlackRock doing some heavy buying in the first week of January, but then they finally started selling off now. But then interestingly, we've had some Grayscale and Fidelity have bought a little bit, but it's still fairly low data for Friday. Like I say, I don't know why there wasn't any Thursday data. My other source, which is Bitcoin Strategy Platform, is showing that there was. So it's got a few zeros in here, but it does have a Grayscale figure and a Valkyrie figure and a total figure. So I'm not sure what's happened to the data on the 9th of January, or if there was a public holiday that I'm not aware of. Because there's still no BlackRock or Fidelity data for that day, so it's slightly confusing. But that's just a general data issue. But yeah, so we are seeing a bit of selling off there, so it's not surprising we've seen this drop. Then I had a quick look at the walls and the liquidation data. So the walls really, there are, at least now we have some buy walls. We didn't have many previously when I looked. So down at 88k, Binance 88k, 87k has got decent sized walls, 85, and then 80. I don't know if we don't go much lower than that, but I don't know. Cross that bridge when we come to it. It seems to be down one down there.